Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. Today we're diving into Venus Concept Incorporated's latest quarterly report, and let's just say the numbers are telling a story, and it is not exactly a fairy tale before we jump in. If you enjoy these deep dives into financial filings, make sure you are subscribed to the channel. And if you want to talk more about these companies and get direct access to our analysis, join our Discord community, linked in the description below. Alright, so Venus Concept Inc. has filed their quarterly report for the period ending the 30th of September 2025. This document is chock full of financial details, and our job here is to cut through the jargon and find the real story. Think of it like a treasure map, and we're looking for the buried gold, or in some cases, the hidden rocks. Let's start by looking at their balance sheet as of the 30th of September 2025. This gives us a snapshot of what the company owns and what it owes. Total assets are around $61.6 million. Now, that might sound like a lot, but it is actually down from just over $68 million at the end of the previous year. So they've shed some assets. One of the numbers that jumps out is their accounts receivable, which is money owed to them by customers. As of the 30th of September 2025, this was about $16.5 million. Now, compare that to the 31st of December 2024, when it was over $18.7 million. That is a pretty good drop, suggesting they're either collecting money faster or perhaps selling less on credit, which isn't always bad because it means they're getting paid upfront. Now let's talk about what they owe. Total liabilities are hefty, at a little over $58 million. That is a significant chunk of their assets. And look at this, their short-term note payable just jumped from about $8.3 million at the end of 2024 to over $25 million by the end of September 2025. That is a threefold increase in just 9 months. And that is usually a sign that a company is borrowing heavily to keep things afloat. When we look at stockholders' equity, which is essentially the owner's stake in the company, it is a modest $3.1 million. Now, that might seem okay, but remember, they have accumulated a deficit of over $355 million. That deficit means that over their lifetime, they've lost more money than they've made. It's like a hole in their financial bucket that keeps growing. Moving on to their income statement, or the statement of operations, this tells us how much money they made and lost over a period. For the third quarter of 2025, total revenue was $13.8 million, down from $15 million in the same quarter of the previous year. That is an 8.2% decrease. Over 9 months, the picture is even less rosy. Revenue dropped by 12.1% from $49.1 million in 2024 to $43.1 million in 2025. They are definitely selling less, and that is a concern. Interestingly, their cost of goods sold dropped slightly, which makes sense if they're selling less. But the problem is gross profit, which is the money left after paying for the goods sold, took a bigger hit. Gross profit for the quarter fell 11.1%, and for the 9 months it was down a significant 19.2%. This means their profit margins are shrinking, and when you look at their operating expenses like selling, marketing, and administrative costs, they've actually increased. So even though sales are down, they're still spending more on running the business. This combination of lower sales and higher expenses is leading to a bigger operating loss. For the third quarter, the loss from operations widened to $9.5 million, from $7.1 million a year earlier. Now, here is a big one. They had a massive loss on debt extinguishment, a painful $11.3 million in the third quarter, and a total of $14.2 million for the 9 months. This means they're restructuring their debt, likely changing existing loans into new ones, and that process often comes with a hefty price tag. All these factors combined push their loss before income taxes even further into the red. For the quarter, it was a staggering $22 million. Over 9 months, it is a loss of $45.6 million. That is a lot of red ink. Now, let's look at shareholder value. The number of basic weighted average shares outstanding has more than doubled from 709,000 in the third quarter of 2024 to over 1.8 million in the third quarter of 2025. This means much of their financing has come from issuing more stock, and when the company isn't profitable, more shares outstanding means each existing share is worth less, diluting ownership. Let's talk about the risks. Venus Concept acknowledges they are an innovative global medical technology company that develops, commercializes, and delivers minimally invasive and non-invasive medical aesthetic and hair restoration technologies and related services. But the report paints a picture of a company struggling. They have recurring net operating losses and negative cash flows. As of the 30th of September 2025, they had an accumulated deficit of $355.5 million. This raises substantial doubt about their ability to continue as a going concern within 12 months. This is a serious warning sign. They need to either become profitable or find more money. They're trying to sell their Venus hair business for $20 million. This is a move to get cash, showing they really need to boost their financial health. But even this sale is facing legal hurdles, with the company filing a complaint to finalize the deal. That is not a good sign for a smooth transaction. They've also had issues with NASDAQ listing requirements that were below the minimum stockholder equity, and it took a reverse stock split, which is essentially reducing the number of shares to artificially boost the price. Purse hair to get back in compliance with bid price requirements. This is often a sign of a company in distress, trying to stay on the stock exchange. Looking at Venus Concept Incorporated now, it is a tough picture. Their revenues are declining, their expenses are rising, and they're burning through cash at an alarming rate. The massive losses, the increased borrowing, the recent stock dilution, and the continued efforts to sell off parts of the business all point to significant financial challenges. While they mention efforts to improve credit screening and manage costs, the core problem is their profitability. The substantial accumulated deficit and the warning about their ability to continue as a going concern are red flags that investors need to pay very close attention to. The sale of the hair business is a critical step, but the fact that it is facing legal challenges creates further uncertainty. In my opinion, Venus Concept Inc. is in a precarious financial position. They have a long road ahead to prove they can return to profitability and sustain operations. The risks, especially the ongoing operational and financial risks, are substantial. Investors should proceed with extreme caution. Alright, that is our breakdown of Venus Concept's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.